points. The Black Industrialist Programme seems to be gaining momentum, with 46 projects approved since launch last year. 100 Black Industrialists are expected to receive support by the end of March 2018, a year earlier than the initial deadline. Tsidiso Disenyana, Senior Economist at the Export Credit Insurance Corporation, joins us now for that conversation. 46 projects already under the belt. It's already a great program by government. So how do you then broaden it?
I think it's a catalytic, I would say, program by the DTI, a game changer. It has two, I would say, pillars into it: debt financing and also grant funding by the DTI. And so far, so good. A lot of projects, as you can see, have been approved, but the program currently has more been on the debt financing part. Lots of companies have been receiving grants from the DTI for capital equipment, land and buildings, and commercial vehicles. But the process issues from the DFIs and other counterfunders to the grant funding, that has been a lot of problem, whereby companies require a lot of documentation. They have to go through lots of processes for their projects to be approved. And in the meantime, they lose out on the grant funding. I think the DTI and government needs to fix that part in order to ensure that the program does make a meaningful impact.
Historically, these companies don't have the equity. So how does government come in, or how does private sector come in and try to help get them the equity that they need?
That's the biggest issue, in fact. The reason why the BI was created was to really create access to financing, especially for black entities, whereby they really had no opportunity or lots of opportunities to get funding from the private sector, especially from the commercial banks. Now with syndicated financing from the DFIs, where you have your PIC, Land Bank, Export Credit, you have NEF, CIFA, and the IDC, that was the main I'll say vehicle to create access to funding for lots of companies. But like I said, the problem really now is more about process issues and the documentation required and the turnaround time by the DFIs to ensure that the companies do receive the monies. On the grant funding part, that's not a big deal. The turnaround time, the DTI can still reach that within 2 months, and companies can be able to access the grant. Now, you have about 90 days to put in your first name after the grant approval. But now, if you don't have any counter-funding, either from the DFIs or from the private sector, you have a big problem, because you might lose out your grant funding if you don't put out your first name within 90 days.
And then how do we, close that gap? Is it a training thing that we need to do there, or do we need to extend the type of skills that they have?
Not necessarily. I think the DTI needs to speak with the DFIs and possibly in the nearby future include other institutional investors and commercial banks into the syndicated funding. But at the end of the day, it has to be business unusual for the DFIs. And what has been happening has been business usual, which we did not advocate for. So they have to cut on their turnaround time, especially their internal approval processes, and also the documentation required from the companies to access debt financing.
But it's also fair to say we're not just producing black industrialists, we also need to produce black industrialists that are profit-making as well. So, we can't always just give the grant the whole time. So how do we make sure that the guys actually make the money?
They will definitely make money, and one of the impediments for black entities, yes, they can access the funding, but the issue is market access for them to sell their produce. And in that regard, the Department of Trade and Industry has brought in state-owned entities such as your PRASA, your Transnet, Eskom and likes, to extend off-takes to the entities that shows potential to grow in the future. So I think that's a big plus to ensure that these companies, even if they do have access to financing and to the grants, they can be able to sustain their companies for the next 5 to 10 years.
And with the challenges that you speak of, obviously in the manufacturing sector, is it feasible then to take it to commercial farming or construction, given that you're still facing problems in just one sector?
The problems are across the board in manufacturing, and I would say the biggest issue is the technology that the companies bring on board. At the end of the day, if you do lack specific skills in order to convert your raw material into a final value-added manufactured product, you need some sort of technology, and in that regard, you need to involve other government agencies that can provide that kind of skill to the entities that are aspiring to come and participate in the manufacturing process.
Well, definitely a project that's doing well, but with its own challenges. That was Tsidiso Disenyana, Senior Economist at the Export Credit Insurance Corporation. ABSA is going to court to challenge what it's described as the public protector's irrational and unreasonable report. The bank's spokesperson, Songezo Zibi, says a thorough scrutiny in court is the only way members of the public will find out the truth.
There are two things which are common cause, by the way. The first is that the manner in which the assistance package was put together and done was unlawful. This is common cause.